This webinar provides illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Black Business and Professional Association. The BBPA makes no representations, warranties, or guarantees as to assume no responsibility for the content or application of the material contained herein, and especially disclaim all liability for any damages arising out of the use or reference to or lines on such material.
Good morning, everyone, and a warm welcome to the BBPA's Community Space for Financial Literacy. I'm Chanelle Smith, and I'm absolutely delighted to be your host for the next few weeks. Before we dive into this exciting journey, allow me to share a little bit about myself. I've spent several years working in the financial industry and studying finance. I am the founder and executive director of TSK Wealth Planners, a nonprofit designed to help underserved communities. I am passionate about helping individuals and communities achieve financial wellness. My journey in this field has led me to this wonderful opportunity to facilitate this financial literacy program with all of you. Over the next few weeks, we'll be exploring the world of credit and credit rebuilding. And I couldn't be more thrilled to have you all here with us. It's a subject that can sometimes feel complex, but together we will break it down into manageable and actionable steps. Today, we have the privilege of hearing from Shaquille Shaq Hall, who is an expert in this field and a passionate advocate for financial literacy. Shaquille Hall is a mortgage professional and an entrepreneur with a wealth of knowledge and experience in the financial industry. He's the founder of Hall Real Estate Investments, providing investment solutions through investing, acquiring, and renovating real estate. He enables his clients to achieve their financial goals and earn passive income. With almost a decade of experience in the financial industry and over 15 million in transactions, Shaq has helped hundreds of people secure home loans, registered investments, retirement funds, and budget plans. He's not just a financial expert. Shaq is also a community leader, actively involved in nonprofit organizations, advocating for financial literacy and the power of credit to rebuild wealth. Thank you, Shaq, for sharing your incredible expertise with our community. With you guiding us, we know we're in capable hands, exploring credit and financial empowerment over the next few weeks. Is everyone ready? Let's get started.
Amazing, amazing, amazing. Good morning, everybody. If you can hear me, as always, just drop some ones in the chat box or drop your favorite number. Ones. It is November, and I'm excited to be on this call, just like every other week, sharing the value, being a part of this space. Super grateful. Shout out to BBPA, and shout out to all the organizers, everybody who are helping to make this possible. Today, we are going to have an exciting topic, and a topic that, as Chanelle mentioned, it may be daunting, but it's a conversation that needs to be had, because this is something that's going to help you long term, and this is going to help you learn the things that I do in terms of financing, helping people get financing. Understanding debt to income ratio is a very important concept. So we're going to talk about how to manage debt and how to improve your debt to income ratio as well. So I'm excited. Welcome, everybody. Let me just check chat box real quick to see if I'm getting some ones. If you guys are early, or if you guys are actually awake. So I do see some twos, some ones, a little bit of fours. Keep the chat box going. I appreciate everybody for joining on. You know, you guys could be doing anything with your morning, but you decided to tune on to get some value. So for some of you guys, if this is your first call, I'm letting you know what you signed up for, jumping on this call. This is going to be an interactive call. This is more of a conversation rather than the presentation. So I will appreciate, and trust me, it makes the calls a lot more fun when we get engagement. And I promise you the engagement is going to be worth it, especially on this call, because we're going to be doing a giveaway. So some of you guys were on the call last week. Some of you guys see the social media marketing that's going on right now. I'll explain a little bit of what we got going on today with our giveaway. But next week, November 11th, a massive event is happening in Toronto, Canada, called the M2N Conference, right? So M2N Con. And honestly, I don't know what to say, but you guys should definitely be there because it's going to have immense amount of value, not only learning about real estate, not only learning about financial literacy, but those of you who are in sales, you're going to learn from one of the number one, quote unquote, top sales person by Daniel G. You're also, some of you guys may have watched on YouTube, EYL, Earn Your Leisure, the CEO, co-founder, Michael J. McDonald is going to be there as well too. You got Ian Dunlop, who's basically a stock investor. So you're going to get a vast amount of information in one conference in the day. And BBPA is thankfully a community sponsor of this event. So we have the privilege of giving away a couple of tickets today on today's call. I see somebody in the chat box said, I got my tickets. Shout out to you, Natalie, for getting your tickets. For those of you who haven't got your tickets, you can visit the Ticketmaster link in, I think, BBPA's bio, or just on social media on M2M's Instagram page. You should be able to get the link as well. But some fortunate people on this call, we're going to give away 3 pairs of tickets to this event. I think it will be tremendous for everybody to come out, network with other individuals, other professionals, and really have a chance to really grow and learn and be in an environment of like-minded people. I can tell you from my experience specifically, me networking, me going to as many events as possible, getting my name out there, especially in this last year that just passed, has been tremendous value for my business, has been tremendous value for my personal growth. And I believe it could do the exact same thing for everybody on this call as well, too, who decides to come out to that event, which is going to be massive, happening next week, November 11th at Meridian Arts Hall. So stay tuned on the call. As I mentioned before, engage as much as possible. We're going to be giving away some tickets, maybe some trivial questions at the end. I'm going to see who's paying attention. And as I mentioned before, please, please, please engage. So thank you guys for dropping your 1s, your 4s, your whatever favorite number that you have in the chat box, to let me know that you're on this call and you are present. Okay, so let's get right into it. Again, we have another insightful call. As I mentioned before, today's topic is about managing debt, improving your debt to income ratio, and we're going to understand about that, right? We're going to talk about that again, right? This series about credit building repair, we're talking a lot about the same topics, but it builds off of each other. And as I mentioned before, and I mentioned in my post as well too on Instagram, these calls keep getting better and better and better. So I am appreciative of everybody tuning in, but we're going to be talking a little bit about that, understanding that, how to manage debt, and why is it crucial for your financial well-being. All right, today we're going to explore debt, effective strategies, how you can take control of your financial future. So when it comes to understanding debt and the impact on credit, what debt actually has on your credit, as always, I got a question for you guys. So let's get some participation. I'm going to start off with a question. It's usually me and Chanelle answering at the beginning to warm it off, but we'll get some participation as well too. You can either unmute your mic, put your hand up with the emoji, and we'll unmute your mic, or type it in the chat box, and we'll be able to get to your answer to the question. But the first question of this morning's call is, can you name different types of debt that you've encountered that may have can you name different types of debt that you may have encountered that have affected your credit? So let's just talk about debt that potentially can affect your credit. So let's get some engagement. Let's answer the question. I'll start off by some debt that's going to affect your credit. I'll talk about the number one, which most of us have probably racked up in the future or in the past. Not in the future. We don't want that to happen in the future. In the past, let's talk about credit card debt, consumer debt. Janelle said consumer debt. Amazing. Credit card debt, consumer debt. Keep it dropped in the chat box. What are some debt that affected your credit? Let me know some different types of debts, because we're going to learn today about different types of debt, right? Somebody else said credit card debt. Keep it coming. Anybody want to unmute your mic? Give me a couple of different types of debt.
Here we have installment loans. I know my car loan was actually really good for as long as you're paying it, was actually really good for my credit. until it fell off, of course. Yeah, so car loans, lines of credit, credit cards.
Keep it coming, keep it coming. You guys are doing
Student
amazing right now.
loan.
These are different types of debt.
Go ahead. You can go ahead. Who is that? Say your name and your profession or occupation.
This is Patricia. I'm a nutritionist. Student loans, those loans that you take out to go on to school or higher education.
Thank you,
Love
Patricia.
it.
Yeah,
Thank you for participating.
that's a major one to your student loans. Cell phones. Yep. Cell phones, bills. Yep.
Cell phones, especially if you're financing it, right? A lot of us, we want to get that free, the brand new. I don't know why everybody likes iPhones, but that brand new iPhone. For me, I'm an Android guy. But anyways, you get those free phones with your phone company, but what you don't see is they're financing that. You're actually paying more over time for those phones as well. So that can be considered debt as well too, especially if you're financing your phone. So that's a great point. Somebody put mortgage. Amazing. Okay, so I'm gonna go over some of these debts very, very briefly. Thank you for participation, by the way, for everybody. There was no wrong answer with that question because everything that you guys mentioned from my recollection and looking in the chat was actually a debt, right? So there's credit card debt, there's student loans, there's mortgage debt, there's auto loans, there's cell phones, there's mortgages, right? These are all different types of debt. And if you've been on previous calls, we talked about that. We broke it down. There's two major categories for these debts. One is the revolving, right? You're paying it. It's like a credit card. As you pay it, you get access to that credit as well, and you can always reutilize that credit. So that's a revolving type of credit. And there's an installment type of debt, or I should say revolving debt and installment debt. An installment debt is like a mortgage or a car loan where you have a fixed amount that you get and you're paying that back at a fixed payments towards that debt. And you do not get that equity back. Okay. So those are two categories when it comes to those debts. Now, when it comes to each and every type of debt, the one that has the most major effect on you, somebody answered it first. It is the consumer debt. We are consumers by nature, right? It is the credit cards. It is mainly the credit cards, the line of credits. But credit cards are the one that take the most hit because they're usually at a higher interest rate. Lines of credits are a little bit less. And in my opinion, as I mentioned before, this is just my personal opinion. I believe line of credits are one of the best products when it comes to debt products at the banks, because they give you basically it's kind of like similar to like a credit card, but you're getting at a lower interest rate, usually around bank prime, and they're only offered to people who have good income to suffice, which we're going to talk about debt to income ratios, and also good credit as well for the most part. Mortgage debt, one of the biggest investments, biggest debt that anybody's going to have in their lifetime is usually mortgage debt. The traditional person usually has a mortgage debt. That's the biggest debt of their lives. Don't be afraid of mortgage debt. Again, if utilized properly and learn different techniques to pay that down, you can build something called equity. You can use that and convert that maybe into a line of credit against your home, and then you can reborrow it. There's different strategies you can utilize as well too. But a mortgage debt, as I mentioned before, is an installment debt, just like an auto loan debt. Okay. And as you can see, all these debts are second nature to us to live our lives, but they do have a different effect on our credit. And it's good to have a mix, as we mentioned before, to help your credit of these different types of debts, the auto loans, the car loans. The student loans are also considered a good debt for those that don't know. I'm going to let you know right now on this call, student loans are considered good debt because what? You're taking that capital from whatever, either a bank or institution, and you're investing in your human capital. And more importantly, with these type of loans, with student loans, there's deferral methods, or they usually charge you a small interest rate. So their monthly payments do not affect what we're going to talk about today. Oh, it does affect, but it doesn't affect as much as these other debts like credit cards or mortgages to your debt to income ratio. Okay. So I keep talking about this DTI thing, right? Or DTR, debt to income ratio, DTIR. So what is it? Can anybody in the audience tell me their DTI? And if you know your DTI ratio, if you are comfortable, feel free to share it. in the chat or unmute your mic and explain what DTI is before I go into my lovely Google definition of DTI and kind of break down what that means in my everyday life, or what I typically look at. But anybody in the audience, keep the engagement coming. I'm telling you guys can win some prizes if you keep the engagement coming. And these M2M tickets, they're M2M con tickets. They're not cheap, right? They're valued right now, I think, at about $120, and it's going to be going up as the early bird expires. So I would love to meet and see some of you guys in person at that event. I'll be there. I think Chanelle was supposed to be there, but I think she's going to be OT in the States. But you'll see some of the BPA team there as well too. So it should be a great event. But let me get the engagement coming in, guys. I want to hear if anybody knows what DTI is. This is today's topics. Do you know what debt to income ratio is? And if you don't mind, what is your current ratio? And we're going to talk about why it's important. So let's see. Do we got any engagement, Chanelle?
Not yet. I won't cheat though. This is my field, so I won't cheat for everyone. I really want to see. It seems like for the first time we've kind of touched on a topic that maybe no one's really too versed in. So it'd be nice to see some guesses and see what everybody thinks debt to income ratio is. The amount of debt versus your annual income. That's true too. And there's a little bit more detail to that I want to hear as well though. Having something to do with dollar amounts, that kind of stuff, the comparison. And we heard from a new person, Delapo Adams. So that's nice. I haven't seen that name participating yet. But you can go ahead and tell us a little bit about debt to income ratio, Shaq.
Perfect. Thanks for the engagement for those who did kind of have an idea of what it is. And it's great. We're touching on topics that maybe most people don't have a conversation about, right? Which is debt to income ratio. And I think it's valuable that everybody should know their numbers and know where they stand. So essentially, the LAPO is correct. You can use your debt to income ratio based on your annual debt versus your annual income. Somebody said they Googled it. But yes, debt to income ratio. For most people, it's better to look at it on a monthly basis. A lot of the stuff that we look at is monthly or maybe even weekly, but monthly would probably be the best because some of our expenses do come out on a month-to-month basis. Debt to income ratio is basically an analysis, a ratio that compares your monthly debt or your debt, whatever, if you're doing it annually, whatever the time period it is, it's your debt versus your income. So it's very simple. It's actually, the answer is in the name itself, right? So that's the formula. It's dividing your debt by your income. So to keep it easy and simple for everybody to kind of calculate their own debt to income ratio, you want to take your monthly debts and divide that by your monthly income of what you're making every single month, right? And that's the ratio. Why is that important? It's important, right? For multiple different reasons. The debt to income ratio is going to help you, one, secure loans, right? It's going to also help you understand if you need to make more money, because maybe some of us are just drowning in debt, right? That shouldn't be at 100, right? It should be at a manageable rate because it's going to help you get loans, get mortgages. It's going to allow you to get even better credit cards at better rates. It's also a big component in financial planning. A lot of financial planners are going to sit down and talk to you about what are you currently making, what is your current expenses. Well, too, they're going to sit down and give you a plan based on your debt to income ratio. So the goal of debt to income ratio, guys, is to bring it as low as possible. If you have your debt to income ratio a lower rate, that means you're doing substantially well. That means your income is suffice enough to take care of all your debt. And it shows that you are a strong financial sound individual. Okay, so hopefully I gave a good definition of that, an explanation of debt to income ratio, why it's important. I can see in the chat box somebody had a Google answer. Perfect, same thing I said as well too. Perfect. I'm in line with Google. Monthly debt divided by your gross monthly income. That's exactly what it is. It's the number one way that lenders measure your ability to manage monthly payments to repay the money that you borrow. That's exactly what it is. So
Excuse
in
me,
my
Shaq, can
world,
you give an
yeah, no
example?
worries.
Can you give an example?
Example of debt to income ratio?
Yes.
Okay, no problem. Let's say somebody's that I'm going to keep it very simple and brief when it comes to numbers. So let's say somebody's monthly expenses is $3,000 a month, right? $3,000 a month. All right, they're taking care of maybe that's going to be their housing costs, which is their rent, their utilities, phone bills, car notes, um, regular bills that they pay, maybe internet bills. So all that expenses, $3,000 a month. Now, very simple, their paycheck that comes, let's say they get paid bi-weekly $3,000 a month. All right, so that will equate to roughly about 6,000 to maybe 5,500 a month. That person's debt to income ratio would be roughly about 50%. Okay. Does that make sense for everybody? So you're just gonna take your monthly debt of what you currently paying for expenses, and then you just take your income
Is there a
and you
number
divide it.
that would be good to aim for?
Yes, I was getting into that. I love that. I'm loving these questions. I'm loving these responses so far, Patricia. So a number that you should be aiming for is you want to keep it towards about 40% to 40% is kind of the maximum. I would aim to try to keep it at 25 to 30%. That's a goal of where you want to keep your monthly debt based on your income, because that shows that you are a financially strong person and your income can now suffice your debts, easily, right? Your debts can double for 2 months and you should be fine to handle that based on your income, right? And I'm glad that that question, that response came through, because last week we talked about budgeting, right? And I didn't get to share my own personal budget. I should have probably shared it, but this is kind of a rule of thumb that I use. Some of you guys on this call are maybe working for a company and you're getting a paycheck every 2 weeks or every month, whatever your pay structure looks like. But as an entrepreneur, for those who are entrepreneurs on the call, this is a guideline that I've used that has helped me tremendously to make sure that I budget myself. Because as an entrepreneur, as somebody who sometimes doesn't know where their check is coming from every month, it fluctuates a lot. So it's really not what you do with $10,000, $50,000, $100,000 is really what you do with a dollar. I'm going to break it down of what I've used and what a mentor showed me, and it's helped me. And I've kept this ever since I graduated from university as what I call the wealth philosophy or the wealth spending habits. And it breaks down what you do with a dollar as an entrepreneur. This is my personal, you guys don't have to copy this, but a rule of thumb similar to what we talked about last week, where we talked about 50, 30, 20, where 50% goes to your needs, 30% goes to your wants, and a rule of thumb, right? That budget rule is a rule of thumb, or the zero balance base method as well too is a rule of thumb you can use. This is the rule of thumb that I've used, where you break down the dollar into about 5 components. 10% goes to paying yourself first. So 10% of whatever I make, every dollar I make, I put it towards paying myself. And I get to do whatever I want with that 10%. So that 10% is, Shaq, do whatever you want with it. Have fun with that 10%. Okay. The other 10%, and I appreciate the response last week too. Some people said that they go and give their money to church. They go to charity, right? They give it to charity. They give it to tithes. They pay the tithes and the offering. Very important. I always put 10% to giving back, minimum. Why? Because in order to receive, it's always great to give back, and make sure you understand that you don't have to be the most wealthiest person to give back. You don't have to be a millionaire just to give back to charity. Some of you guys, even in your paycheck, maybe your corporation is giving back to charity as well too. It's embedded into your paycheck, right? It's always great to give back, and there's always great tax benefits as well too by giving back as well. So not an accountant, definitely seek legal advice, but it's always great to give back. So 10% paying yourself first, 10% is giving back to charity. 25% is living expenses. If you keep your ratios within 25%, as I mentioned before, you are in good hands. And another thing I'm going to talk about as well too, for entrepreneurs, especially that are listening on this call, 25% should go to taxes. Put that aside, right? Some of you guys, if you're getting paid directly from a corporation, you don't have to worry about that, because you see there's a difference between gross pay and net pay, right? Some of us get upset. I know I used to get upset at that. You see gross pay and you see net pay. They're taking the taxes out already for you, right? They're taking that taxes out already for you, and it's usually around the roughly 40% mark of taxes in terms of income. But as an entrepreneur, there's nobody doing that for you. So you got to make sure you put aside 25% for taxes. The other 15% would go back into reinvest into my business. And the other 15 would be going to saving and investing, making sure you're growing your capital. So those are kind of like the 5 main categories I use to split up a dollar. And it's not, or split up the dollars that come in, because it's not what you do with $10,000 or 100,000. It's really what you do with $1. So it's having that mindset to allocate your funds and having a budget for yourself. And it's very related to today's topic, because budgeting and debt is very, very similar. They go hand in hand, right? When you understand how to budget, you reduce a lot of your debt as well too. And more importantly, what we're going to talk about today even further is how to increase your income so that way your ratios is lower. So
And
hopefully that was a great breakdown for you guys. I hear some feedback.
While you're on that topic, sorry to interrupt you there. Before you leave that topic, we had an expired question.
Okay.
Does rental income get factored into the DTIR? I said yes, 100%, and that we would bring it up on the call for sure.
1,000%. 1,000%. And we're going to talk about different ways or different things that is used into your DTI formula as well. But anything that is increasing your income could be a side hustle, right? It could be rental income. It could be child tax benefits. Those are the things that increase your income. So, lenders do look at those categories as well too. I'll get into more detail, and I definitely want to hear some of you guys as well too, some of the things that has increased your DTI, because it's going to be helpful. It's each one teach one on this call, right? It's a conversation, it's not a presentation. So, great question, and thank you so much for asking that. We will get into that a little bit more as well too. All right. So we talked about understanding different types of debts, and I explained a little bit about them and a little bit about the impacts that it has on your credit. And we also talked about what DTI is, debt to income ratio, right? And why it's important. We talked about the formula, right? And basically, I mentioned before, someone asked what's a good guideline to have it. You want to make sure you can have it at maximum 40%, but if you can aim towards 25%, I think you're in good hands. Because typically, I'm going to drop a link in here as well too, so you guys have an additional resource for yourself to calculate your own DTI in more detail. But typically, lenders want to see roughly, they look at 2 main categories. And to further DTI, it's broken down into something called GDS and TDS when it comes to funding, when it comes to financing. So GDS is basically your gross to debt service. So that's all a percentage of your monthly household income. Household income is, you and your spouse, all the income coming in your house, that covers your housing costs. So all your housing costs, which would be, again, rent, utility, your mortgage payments, your maintenance, they call it PMI, your property tax, your maintenance, your insurance, anything that goes direct to your housing costs, that's going to be calculated in something called GDS, your gross debt service, right? That's a subcomponent of DTI in a sense, that lenders will look at, all right? And then the second component is TDS, right? It's your total debt service. And your total debt service is very similar, but more in detail, because it's going to look at your household income, all the income that's coming in your house, that covers your housing costs and any other debt. So the other debt is going to be your credit card payments, your line of credits, any other expenses that you may have as well too, car loans, student loans, car lease payments, any other expenses or debt that you do also have is going to be included in your TDS as well to your total debt service ratio. For those ratios, again, ideal to have your GDS above 32%, and then your TDS should be above 40%, which is your total debt. Those are the ratios that they look at. I'm giving you guys a little bit more information than is on the agenda today, But I really want to empower you guys and let you guys know in the eyes of the lenders in the back end, these are the things that not only myself look at, but underwriters look at, and they're going to assess whether you are credible to get that loan or not. So if you can keep your ratios between 30% and 40 between GDS and TDS, that will be ideal as well too. If you do have strong credit, those ratios can go up a little bit more, because what does credit show you guys? It shows you that you're responsible, creditor, you're a responsible borrower, you're a responsible individual that can pay back their debt, right? Credit shows character to lenders, and it gives them everything they need to know on that report. And we did talk about that in previous calls.
Yeah,
Do I have any? Mhm.
go ahead. You have a
Let's
question?
say, do you have any feedback, any questions so far before we continue going forward?
We had a question in the chat here that I answered really quick. It gets more into the accounting side, but the question's probably amongst everyone, which is the 25% tax, as you mentioned, for entrepreneurs, the same for everyone? My answer in a nutshell was just a breakdown between, like, federal taxes will stay the same provincially, will stay the same across the country, but provincial taxes may vary. And then the 25% is more of a benchmark, which is more customized based on your business revenue. So that was kind of my response. I don't know if you want to build on that or if you want to touch on.
Yeah. I'm always gonna say speak to an accountant, because everybody's financial situation is like a fingerprint. It's different. But I think when it comes to that number that I was taught and that I still follow to this day, it's a benchmark. It's a rule of thumb. Because generally, when you have a business or corporation, you're usually paying around 20 to 30% taxes. You're actually paying a lot less than every other, quadrant. Robert Kiyosaki, if anybody read the book Rich Dad Poor Dad, talked about the four quadrants of how money is made in this world, whether you're a business owner, whether you're self-employed, whether you're an investor, or whether you are, what, I missed one. Business owner, self-employed,
Work.
employee, there you go, and
Yeah.
investor, there you go. So if you're an employee, you're usually paying the highest, or one of the, not highest, the second highest form of taxes, roughly about 40%, roughly. Again, rule of thumb, 40%. Self-employed actually pay the highest, because they're not only paying taxes as an individual, but they're paying taxes as a self-employed person. That's roughly about 60%. And then you have the business owners that pay roughly around 20%. And then you have some investors, full-time investors. I don't know if you're seeing them in the news, but some of them pay 0% in taxes, as low as 0% in taxes, by different tax strategies. But again, always seek advice of a financial advisor, accountant as well too. They're the professionals. They can give you better and dissect your financial situations and let you know exactly your tax category or what you should be putting aside for its taxes, and your investments for your RRSPs, and some of the things that are going to mitigate some of your taxes. Okay, so I don't want to get into much tax talks. I did go to school for accounting, but I'm not a certified accountant to talk about some of these things on this call. But I always refer to seek legal and financial support. And guys, as I mentioned before, we got some tickets to give away. So if I see that name pop up more often, we'll definitely throw you in as a winner for the couple of pair of tickets that we got going on for next week's event. So let's keep the engagement going.
Michael,
But if there's no other comments,
sorry, Shaq, there's a bit of a lag. I didn't mean to interrupt you there. Go on.
I apologize. But I said if there's no other questions or comments, I will continue going. But was there a question?
Michael actually hit us with the answer I was looking for earlier, which was the debt to income ratio equals the solvency. So the ability to cover debt. So that just kind of expands on what we already know. So it's almost like every dollar of debt that you have for every dollar of income, or vice versa. So like your ability to cover your debts or to pay your bills. And that's what we have right now. So you could probably go on.
Perfect. Thank you for sharing that as well too, Michael. It's definitely added value. Yeah, that's exactly what it is. So, and again, it's understanding it all comes down to the bottom line. It's understanding what comes out of your account as debt, and then what's going in, right? That ratio has to make sense, and it has to be at some of the numbers that we're talking about before. at a lower percentage, and we want to lower that as much as possible. Okay, so let's talk about the next topic. Let's talk about managing debt. So, question for you guys as we start off on this next topic, which is, part of the agenda today's topic or today's theme, is what strategies have you used that effectively manage debt and to reduce debt? What are some strategies we can use to reduce debt, guys? What are some of the strategies you use to effectively manage and reduce debt? And you can either drop it in chat box, raise your hand, your mic. How can we reduce debt? That's essentially
Debt consolidation is one way.
sorry.
Can we get a name there? I'm not
I'm
sure.
sorry. Yeah, it's Patricia. Debt consolidation is one way. If you find that you have too many debts, making too many payments, consolidate everything into one. Usually it lowers the amount that you're paying.
Okay, yeah, for sure. That's a good answer.
That's a tremendous answer, and I appreciate your participation, Patricia. Patricia, if you can do me a favor, I feel like you should be our first winner. If you can message the BBPA program, one of the hosts, directly, and that's Danielle, with your first and last name, we're going to send you a pair of tickets to the M2M Con. So thank you so much for participating. But that's exactly another way of managing your debt through a consumer proposal and consolidating your debt for sure. So congratulations, Patricia. Hopefully I can see you at the M2M event next week, but you just want to pair. So make sure you mention or you message the host directly, BPA programs, with your first, last name, and email address, and they'll make sure they get you sent a pair of tickets to the M2M. Again, pay to engage, guys, and answer some of these questions. Hopefully I may do a trivia question at the end too. But anybody else want to answer that question as well too and participate? Again, the question was, how do you effectively manage and reduce your debt? What are some strategies when it comes to reducing your debt and managing it?
Philapo jumped in here as well. He said balance transfers and identifying your needs and wants regularly.
Perfect.
And Chanelle said,
I'm gonna pull up that the Lapo because I love that one. Can you expand a little bit further on a balance transfer? And what do you mean by that?
Sure, yeah. Basically, balance transfers help reduce debt and also helps you save on interest on a monthly basis because your whatever card you balance transfer to or line of credit, for example, reduces that debt load, so it helps reduce interest over time.
Love it. Perfect. Absolutely. That's another strategy. That's a good one. I'll go into that a little bit further. Anybody else want to participate of ways they manage debt and reduce their debt situation?
And
any tools, resources that they use?
Janelle said bi-weekly or monthly budgeting. So keeping on track of your budget.
Perfect. Okay. Amazing. So we got, remind me of the three that we got so far in terms of participation, Chanelle. So we got balance transfer. We also got
balance transfer, bi-weekly or monthly budgeting, and Patricia suggested consolidation, which is not always negative. A lot of people have a negative perception of consolidation. It's not always negative depending on what your interest rates are, what you're being offered.
Yeah. And it depends on how you do that consolidation as well too. If you're doing a consumer proposal, it may have some effects because that's going to be on your credit report. Then notice that you have a consumer proposal. If you're doing a consolidation with just a regular loan, a consolidation loan, that may have a great effect on your credit because it's going to help you. You're going to close all those debts and have one loan and then save on the interest rate as well too. So that's a great strategy to managing your debt. Somebody also mentioned budgeting. We talked about on last week's call about budgeting, the effects of budgeting. I even brought my personal budget of what I use to allocate a dollar. But budgeting essentially is key to making sure that you're able to manage your debt, see areas of where you can reduce debt, and just be aware of your financial picture. It's having that conversation against yourself. It's looking yourself in the mirror. It's looking at your bank statements, what comes in, what comes out, your wants versus your needs. Very, very important. And it's always going to be a theme of a lot of the topics that we're having, because budgeting is very important for your financial well-being, for now, and obviously for the future as well too. It's the habits that you create that are going to create the action that are ultimately going to help create that destiny for you, that positive destiny when it comes to your financial future. And then balance transfer. Go ahead.
Sorry about that. Do you want to finish that balance transfer?
Yeah, let me do the balance transfer, because I actually like this strategy as well. And a lot of people probably don't know what balance transfer is. But institutions, especially when it comes to consumer debt, I've seen it done more with consumer debts, but you can do it with lines of credits as well. Well, line of credit is considered consumer debt, but you can do it with lines of credits rather than credit cards. I see it done more effectively through credit cards. And there's some institutions that actually offer promotions of doing balance transfer. Well, essentially a balance transfer, to keep it short, definition when it comes to it, is you're taking one debt, let's say from one area, and you're moving that debt to somewhere else. So with credit cards is the one I usually see the most, and I've seen it done the most effectively. They have something called boat transfer, but balance transfer, where you can transfer, let's just say you have one consumer card at 22%, and then you have a low interest credit card, let's just say at, I don't know, 15%. You can transfer the higher debt and put it onto the lower debt, the lower interest paying credit card. And sometimes there's a promotion where you don't have to pay interest for 6 months, like 0%. So there's different strategies where you can utilize one debt area or one debt product and transfer it to another debt product as well too, and save on interest and transfer that balance. So that's another way to reduce income, reduce debt, because instead of paying at a higher interest rate, now you can be paying at a lower interest rate on another credit product. Hopefully I explained that well. If anybody wants me to break it down even further, I can, but I just want to break it down very brief and very high level so everybody can understand that concept of balance transfer, transferring one balance in one credit product to another credit product. And ultimately, the goal of that is to transfer at a lower interest rate, so you're paying less on your debt. Somebody said MBA. I seen this in chat. MBA is has amazing balance transfer. There's so many different ones that have great balance transfer. So thank you, Alicia, for sharing that.
Michael mentioned earlier debt that generates income. Michael, I don't know if you want to come on and elaborate on that more. For me, that sounds like bond ventures.
Michael, you know we love hearing from you, Michael. So I definitely want to hear more about that.
Well, I just give by way of an example. By the way, good morning and thanks for having me on the program again. It's great week after week. I'm always here because I do enjoy learning a lot. But I was just thinking about, for example, you can get a loan, which is just creating debt, but it's not something that drives anything that generates income. For example, a mortgage loan. You get a loan for your house. If it in of itself does not generate any income, but you could get a working capital loan, something that you're using in your business. For example, you got a loan to buy a car that you use for Uber, and it's generating income. So again, you have that debt to income ratio. So you have the loan, but it's generating income, not only to repay itself, but to put some funds in your pocket. So I say this to my kids a lot of time. If you're taking the bus to work now and you want to buy a car to go to work, think about the additional costs you're going to add as compared to the convenience of going. So that is a kind of debt. If you want to do debt to do Uber as against debt just to drive to work, that's what I'm talking about. Debt to do Uber is debt that generates income. Debt to drive to work is just for convenience and the luxury of doing that. And it could have saved some money if you're paying a lot of money on the bus. But buying a car reduces that. So that is a concept I just want to convey. Now, when you're going to get yourself involved in debt, think about, is it in accounting to see whether it's an operating debt or it's a capital debt? And the operating one will generate income in the short run. The capital will do it, but over time. So I don't know if I made it clear as mud, but that's kind of what I had in mind when I talk about debt that will generate income.
Thank you, Michael. So you're
Yeah.
talking about like investment debt. So making sure that the debt that you take out is being put in a place where you can also generate some income from it.
Or for the very reason of getting the debt, the one I like to use is buying a car to do Uber.
Yeah.
You know, you can buy a car just to have a car and, you know, drive around and what have you. But you can also buy a car to do Uber. And if you do that, then it's generating income as
Perfect.
against just the car that you have to be paying by the principal and interest. And there's no income being generated from the car. That's the example I like to use a lot.
Got it. Thank you, Michael. You can go ahead, Chuck. We have a hand raised too. When you're ready, you could take that one.
Yeah, I definitely want to take the hand as well too. Chef McRae, I see you on the call. But what Michael has mentioned as well too, which is key, is the mindset behind that as well too. That I try to do my best of explaining exactly how Michael explained it as well too. It's what's the purpose of the debt as well, because in this day and age, guys, if you understand debt properly, and this is what this is one of my core beliefs as well, your debt should be making you money. So what Michael has mentioned, and it's the mindset behind it as well. You know, we always have the mindset, especially you know, some of us have had parents or people around us that tell us that it's evil, it's bad. But if you can have the mindset of understanding how to manage that properly to allow it to generate you income, that's the key. And I feel like you're now thinking as a business. You're now thinking as what I like to call the elites, because that's what they do. They take that and they allow it to. That's what banks do, right? They take that from the Federal Reserve and the Bank of Canada. They borrow at a certain interest rate, and then they charge us consumers a bit higher as well to make more money. So just that same way how the banks operate, you can do the same thing. You can take a car loan, and as Mike mentioned, right? Michael mentioned, you can start a Uber business. Or what I've done in the past, and this is what I've done, another opportunity is Turo. I don't know if you guys have heard of Turo. I've rented out my car during COVID and for I think almost 2 years. And I made, you know, a couple $1,000s for renting off my cars. It was covering the car note, it was covering the insurance, and I was actually cash flowing off the car. So instead of that being bad, now that became good because it's generating me income. For some of you who own a house, rental income, we talked about that, another form of income. Now you can create basement suite. You see a lot of those popping up in different pockets in GTA of different additional dwelling units. And now your mortgage now, yes, it's costing you the 5% annual interest rate, but now you're making, let's say 20% on that debt. You're now profiting and creating cash flow, right? So there's different strategies as well too. There's ones that I do as well too, not to plug myself in there, a business that I operate for homeowners that want to generate more income through Airbnb, short-term rentals, or VRBO, where you know you can generate another source of income through short-term rentals and generate even more than market rent, right? For those who are looking to pay down their mortgage a bit faster, now you're getting more income to pay that down. So great point, Michael. I'm glad that you mentioned that because again, it's the mindset as well too of taking debt or taking these daily expenses and turning that into income. So let's take that other hand that we have here. So Chev McRae, go ahead, Chanelle. You can go ahead and facilitate that.
Chev, can you let us know who you are and what your profession or occupation is?
My name is Siobhan. Everyone knows me as Chev or Chevy. I am a government worker. So I work for the Ministry of Public Business and Service. And mine is more of a smaller, but I find it a little bit impactful, especially if it's a monthly BTI that we're looking at, is sometimes calling your bills, like cell phones, internet, they're very competitive. So if you call them and you can sometimes negotiate or have your monthly fees be lowered, and then that reduces your DTI per month. And then overall, when you look at it annual, it has reduced.
Yeah, definitely. I don't know if you were part of the this community space from the beginning. On the very first call, I actually shared that a similar point. I had Bell cut my bill into less. It went from $201 to $84 just for making one of those little calls. So Chev definitely tapped in with some great advice there. Call your bills, your collectors, subscriptions, and see what you can do about the pricing there. I think that's a big one, Shaq.
Yeah, so Chev, were you on the
Yes,
previous
this is my
call?
first call.
Is your first call? Okay, so it being your first
This is my
call
first call.
and you participating, that I definitely want to give you a pair of free tickets as well too, because you had a great participation answer. That literally was one of the next topic I was going to talk about in terms of managing debt. Because that's another strategy we talked about on previous call, and we're going to bring it up again today because it's very important us having those conversations to reduce and manage our debt as well. So Chev, congratulations, you're a second winner for today. Just message directly BBPA programs, the host, your name, your email, first and last name and email address, and you're gonna win a free pair of tickets to M2MCon next week. So congratulations. Chevy. All right, so the
Yay,
next
thank you
one,
guys.
you're welcome, you're welcome. So, as I mentioned before, in terms of what Chev talked about, is calling your creditors, talking about your bills. I want to bring it up because it's somebody put in the chat box as well too, that they did the same thing at Rogers. In Canada, in this consumer environment of these big corporations that compete against each other, it's very profound that we call our companies, especially if we're looking at our debt and it's increasing. Like, why is it going up? Ask those questions and do not be afraid to let them know that you're a loyal client, loyal customer for X amount of time of years. All right. And say, listen, I need to get that reduced, or I'm moving my services to the other provider. You'll be surprised how quickly they give you offers and reduce your debt. So now, let's just say you're paying $100 for your phone bill. Now maybe it goes down to like $70. That extra $30 that you're saving a month, it's an extra $300 that you're saving. So stuff like that, calling your creditors, calling your credit card companies, and if you've been a good paying a client as well too, paying your credit cards on time as well. I mentioned it before, and you have good credit, you can actually reduce your interest rate as well too. You can reduce your annual payments on your credit card. There's so many different strategies. I mean, so many different benefits you can do by just having a conversation. And I always say this as well. I said on previous calls, the worst thing that they can say to you guys is no. But it doesn't hurt by trying, because guess what? Long term, guess who's winning? You're going to be winning by reducing your income, reducing your debt, reducing your interest rates, and getting things back for free, for being a loyal, an outstanding, great customer, great client to these companies. Right? They're not your enemies, they're your friends. So if you work with them, they will work with you as well too. And ultimately, the goal is saving, right? The goal is reducing that debt. So amazing feedback. I love it. I love it. Keep it going, guys. If there's any other questions or comments on the managing debt or strategies, I'll take one more before we go forward. But we're almost there, guys. I appreciate the participation so far. It's been another fun call. And we're not done. The best is yet to come, guys. Any other comments, Chanelle, or any concerns or anything else in the comment box or questions?
Yeah, most definitely. Delapo said debt payment plan has helped me. Well, in addition to budgeting. And Natalie said, any advice on reducing insurance? Okay, so two separate ones. So Delapo said debt payment plan has helped me as well, in addition to budgeting. So I guess just having like a debt repayment plan, having a budgeting plan, as we spoke about earlier. And then Natalie Tate said, is there any advice on reducing my insurance company costs? And what is good? Oh, okay, so a couple questions. So with the reducing insurance company costs, I guess I'll tap in and then I'll give it to Shaq. It definitely primarily depends on what insurance you're talking about. Are we talking about life insurance, car insurance, homeowners insurance? I think that's important before we even tap in. So Natalie, if you want to come on or ask a little bit, give us a little bit more detail to that question. And Shaq, I don't know if you want to weigh in on that one.
Yeah, for insurance, if again, it depends on what type of insurance it is. But just like every other thing or every other company, it depends on again your relationship. How are you? Because in Canada, you're gonna have to have insurance on your home, on your car. Like, are you somebody that's submitting a lot of claims? Are you doing well over years? Maybe you can call them and reduce it on the insurance. I see it less on the insurance side, I'm gonna be honest, but it is possible that they can reduce your monthly premiums as well too, based on how well um, you've been a policy holder. But yeah, that's my feedback when it comes to insurance. It all depends on the type of insurance as well too.
Yeah. And I see now you said car and home, no claims. So what you want to do when it comes to insurance in this industry is you want to exercise your competitors, depending on whether or not you're in a contract with whatever kind of insurance you have, car and home wise, just exercise your competitors. So that could mean using a broker. Connect with Shaq. He knows tons of people in the finance industry. So do I. You want to use a broker at that point so that they can just live compare companies and compare rates for you. And then let you know what's best fit. But at that point, I would say just employ a broker. Yeah.
Yeah. And anybody else has feedback as well too, please answer in the comment box because I'm seeing so much great answers in the chat box. It's been great. And that's the power of community, right? You know, some people have some better advice than I do, right? In the chat box. Somebody said setting up automatic payments to make sure you don't miss it. We talked about that in previous calls. It's very important. Set up automatic payments because now you're going to be a more credible person. And again, you're always making sure your bill payments are paid on time. But again, I rarely see it with this is my personal opinion from what I've seen. I don't see it as much with insurance, and you're going to see insurance climb usually on a year-to-year basis. It follows inflation, but it doesn't hurt to try to get it done to reduce your monthly premiums that you're paying to your insurance companies. But of course, if you've been a great paying insurance client, there has to be something that they can do for you to help you out. And again, some people were in the chat as well too. I missed some of them, but we're mentioning different balance transfers that were cheaper, different ones that they use as well too. Great programs that some of you guys should take a look at as well too as another option to reduce debt. So a lot of feedback, a lot of comments when it comes to debt reduction, different strategies that we mentioned as well. We could talk a little bit right now, kind of that's the next topic of, how do we increase our debt to income ratio, right? How do we increase that? And primarily it's what I touched about a little bit briefly was increasing your income. That's it, right? For the most part. I mean, you could reduce debt. We talked about reducing debt, but that second component, which is a fun component, especially in today's day and age, right, is increasing your income. Now, I want you guys to all understand, we now are empowered even more than before. Where we are now is definitely advanced for where we are 10 to 20 years ago. The technology that we have right now, the ways and the methods of making income, especially after this pandemic that we came out of. This pandemic that we came out of. Sorry, I apologize about that. This pandemic that we came out of, there's more ways that people are generating ways to make income, right? So when it comes to DTI, it's all about increasing your income. And we're in a day and age where, we have AI everywhere. We're in a digital era, right? We have things like ChatGPT. We have things like the biggest hotel company in the world, Airbnb, that owns no real estate. We have the biggest taxi company in the world, Uber, that owns no cars, right? Other people are putting their ride sharing cars on the platform and generating income, right? We have things like that that help us all generate more income. So it's really about being creative. And I have a question for you guys, as always, to make sure we can keep this engaged. What are some of the things that you use right now in today's day that helps you generate income? So I shared two, and I can share it again. Turo was one of the things. I don't do it anymore, but one of the things I used to do where I would put my car on Turo, rent it out to other people, and generate income through that. I wasn't driving much. I was at home. I had a newborn. So I had my car on there and I was making income through that. Another way is Airbnb. finding a basement unit, putting it on the market, and generating income through there. What are some of the ways that you guys are generating income right now that's increasing your debt to income ratio? And I want to hear
Hi.
a lot of creativity in the chat box or unmute your mic.
Hi, this is Patricia. I'm sorry, I can't type because I'm driving, but I have international students staying with me. And in the past, I've done one, sometimes two. And this past, the start of this school year, I was determined. I said, you know what, I'm going to go to three. Thank God my son agreed to move to the basement. But I literally have three students staying with me right now, and have really increased my income at that way. I increased the amount that I was charging, but also I increased the number of students. So all three vacant room upstairs are occupied by students right now.
Yeah, that's awesome. Yeah.
I love that.
Yeah.
And Patricia, drive safe. Thank you so much for commenting while you're driving. And this is why you deserve to win with those tickets. Great. I appreciate that. Chanelle, you're gonna comment?
Yeah, I was just gonna say, Patricia just reminded me a lot of my dad. My dad does that right now. We hate it, but he loves it, right? Because his mortgage is getting paid and he's just living the life. But he's got three students upstairs as well, in the vacant rooms in his house. And he intentionally purchased a larger home than needed, to be like with the intention of doing that. He's an investor, he's into real estate and all that. So I know for homeowners, if you can handle a slight bit of discomfort to generate that income, even a bedroom people will pay for right now in the GTA. So yeah, I think that was value added, Patricia. Thank you.
Just another quick comment, like, you know, and I just want to give you an idea of what you can do, because I live in Markham, but we have people in Markham that are getting $2,000, $4,000 per child. Mine's not that high, but you know, my sister actually has a student and she's literally generating from one child $2,000 a month. She has a second child that she gets $1,600 a month for. So it could be quite lucrative. And that's all I have to share.
Thank you so much, Patricia. I definitely know that. In the chat right now, the big topic is international students. I saw Alicia's asking about it. Michael's asking about it. All three of the students that live in my dad's house are international students. It is, as Patricia said, very lucrative right now. To be supporting that life. I don't know if Shaq, you have anything to touch on when it comes to that.
Yeah, I'm seeing an increase in some of the stuff that people are talking about right now. And we're seeing more lenders being acceptable to not only Airbnb income, but rooming, right? Renting out a room in your house. Now that is going to be considered a form of income that's now going to help your DTI ratios, right? So a tremendous way. Right now we have a housing demand, especially here in Ontario, right? You know, there's so many people coming into this country where there's less homes than there are people. So opening it up your house, if you're comfortable doing that, renting it out, generating income and helping meet some of that demand, you're going to make money. And exactly what Patricia mentioned before, it's going to lower your debt to income ratio, right? You're making more money. It's taking care of some of your debt as well. So, you know, shout out to you, Patricia. Shout out to everybody, Chanelle's dad as well, too, that's doing that. And all the other people that are doing that as well, too. Because, again, helping with the demand and also helping your pockets as well. So great method as well. And then somebody said foster care, children. I've done applications with people who have foster care, a number. That's another one that's coming up as well, where they're getting money from the government. That is considered income as well. Even your kids, some of you guys, depending on your income that you have as well too, that are getting child tax benefits. That's considered income as well too. I'm not saying go out there and have, you know, 10 kids just to get money from the government, but it's considered income as well. So for those who have the heart to have the kid and have the heart to, you know, have foster cares as well too, and taking kids into your home and raise them, that's another form of income as well too. So thank you guys for sharing. Any other comments, Chanelle, or questions?
Yeah, definitely. Before I even touch on those comments really quickly, Chev, if you could message the BBPA with your information and the information of your guest who will be receiving that second ticket. And the same thing with Patricia, just send a message to the BBPA with that second guest's info if you haven't already. So back to the chat though, we have I started a business. Alicia said she started a business, and Tiana said, I tutor students. I like both of those a lot. Yeah.
Perfect. Yeah, business income is going to help your DTI because now when you have a business, whether it be sole proprietorship or a corporation, your business is not going to be paying yourself as well. That's great. Tutoring, if you have a skill in certain things and you can give back and help, a university student, a college student, or even a adolescents, it definitely helps. I used to tutor as well too, so that warms my heart hearing that. I love math. That was one of my favorite subjects, so I would only tutor math because math is, in my opinion, the best subject. Is either you're right or you're wrong, and there's multiple ways to get their answer, right? So love that. So any skills that even reminds me as well too, any skills that you may have, guys, now is the time to think about creative ways, and you can plug it into AI where you're able to generate income, because again, it's going to help your debt to income ratio, right? So different ways that you can have side hustles, start up different businesses that are going to generate more income for you, that ultimately is going to help reduce your debt. Somebody said child tax benefit depends on the income. Yep, I mentioned that as well too. CCB does depend on your income. Not everybody's gonna get CCB, but it all depends on your income. Talk to an accountant, a financial advisor. They'll definitely be able to advise you when it comes to such. Any other income that you guys are generating right now that's reducing your DTI? Any last final comments?
I would like to hear what kind of businesses we started. I know some businesses, let's say during COVID, were more lucrative than others, and were able to perpetuate their revenues and their income. But what kind of businesses are you guys having success in now? I already got Emeka Maxwell got back to me, said blogging. My business is a CMOS company, so that's pretty interesting. Emeka said blogging. Alicia said my business is a CMOS company. So that's really nice.
Hi, this is Patricia again. I just want to add another one I'm doing. I'm actually doing 7 different ideas right now. And, I don't work for anyone. I'm not an employee. I am self-employed. I like to use that title. But during COVID, I started cooking for people. It's mostly seniors, but I've been doing it and it's been lucrative for me. I don't like a lot of clients. I once had a contract for 42. It was just too much work. So I keep it at between 10 to 15 people, and that works really well for me. My neighbor literally in front of me actually renovated their garage and they turn it into a storage facility. They've got freezers in there. They're literally running a restaurant out of their house. So I just thought I'd add that in. That's it.
Thank you, Patricia. Yeah, I know a lot of people were cooking and that kind of stuff. A lot of the home stuff, hospitality, service industry, those kind of things have really been booming as well.
Yeah, I love it. I love it. Exactly, guys. Creating a skills, your skill set. If you can cook, cook and make some money on the side. That's a great feedback point. And especially during COVID, I think she said seniors as well too. I don't know how much people know about this on the call, but the biggest demographic right now is the seniors. It's the baby boomers right now that are retiring. So, for those who are entrepreneurs on the call, or those who have businesses as well too, it's meeting and finding solutions that are going to meet the demand, right? Create a business or a product or a service around the demand. Some people have it backwards, right? They want to create a business, provide a service that nobody's gonna buy. There's no demand for it. If you do it around the demand, you're gonna make money, right? So I'm loving the feedback so far, and hopefully it's encouraging, it's inspiring for other people on the call as well too, to have their brain working, have that creativity juices flowing, so they can start to strive for building something on the side other than their 9-to-5 paycheck that comes in every single month.
And these ones that we have in the chat too are also really good. I know people often stray away from entrepreneurial activities, assuming that they don't want to start a business, but there's some ways here that are not only entrepreneur, but are just revenue generating activities for people. So Emeka said again, selling unused items. So, or even used items as well, secondhand items, selling used items. I have a friend right now that's getting some new furniture. She's selling her desk, her child's dresser, his old bed, bunk bed, like those kind of things you could do and generate some income. And then there's virtual assistance or support for small business owners and solopreneurs. And I know anyone that's in admin or does office work, when I used to do administrative work, I used to do this all day, like on the side, doing like little administrative work for other people or entrepreneurs. Rental properties, again, Natalie came at us, rental properties.
Yeah, rental properties, selling unused items. Um, Facebook Marketplace is my friend. I love Facebook Marketplace. So think about it right now, guys. Some of the stuff that we have in our homes, we don't even use them. Even some of the clothes items as well, too, right? There's companies, I think like Plato's Closet, that you can sell your items that you rarely even use and get money back for that as well, too. That could be income, right? You know, I had an auntie that's we call her the thrift queen. She goes to thrift shops, buys stuff, buys it for very cheap, and then sells that. There's a guy who I follow on Instagram. His name is Gary V. He talks about his come up of having garage sales, buying things from garage sales and selling them, or even going to storage auctions, buying things and then flipping them. That's another source of income as well too. Again, you have to have the heart and the time to do it, because again, you're gonna have to be going through these platforms. But Facebook Marketplace is another great resource as well too. Somebody said e-commerce. You guys are great naming an amazing. Nobody has any excuse right now how to generate more income in today's day and age, because the chat box is going on fire with different methods of generating income in today's time. Yeah, like I'm seeing a lot of good ones here.
Yeah.
Creating digital products.
Yeah.
Love it, love it, love it.
And as we see these suggestions too, everyone isn't like a expert in all fields. So Alicia says creating digital products, maybe she knows how. So now you've upped a level, you can earn money teaching people how to create digital products. So that's pretty helpful. I saw a hand. I'm not sure if someone had a hand up. Go ahead and speak. Shaq, I don't know if you have any last, the time has flown by once again.
Yeah. We're wrapping up. We're wrapping up. But I'll touch back on digital products as well too. We're in a day and age where blockchain technology is evolving as well too. Do your due diligence, learn about that stuff too. Do not be afraid of the new technology, because before, what we're sitting on right now was once technology that was new to us, that it scared people. The internet, Zoom, right? A lot of people didn't like Zoom, but now everybody's using Zoom, right? So, and their stock went up as well, right? So you know, it's understanding those components where you can maybe generate something called an NFT, a non-fungible token, where you can sell it online and sell these digital products as well too. So there's so many different ways in this day and age, and there's going to continue to be more opportunities to find these ways, find ways to make income. But generally, as I mentioned before, guys, for those who are starting the business, is look for the demand first and then create a product or service around it, find the audience, connect with them, find out what they want, make and create things of what people want, and then of course deliver at the right price. It's always important. Once upon a time, buys used clothes for toys and kids. Yeah, exactly. Right. So different ways you guys can generate income. So that's ultimately, as I mentioned before, going to help reduce your DTI, your debt to income ratio. Because if the more income you're making, it's gonna lower your debt to income ratio as well too. And then we talked about ways that you're gonna reduce your debt, right? Which is great. So let's wrap it up, guys. So at the end of the day, the reason why we're having this conversation is for long-term benefits, right? Managing your debt, you know, lowering your interest rates, ultimately being aware and having your budget is ultimately going to improve your credit, and your credit is ultimately going to get you lower interest rates when borrowing again as well too. The goal, the conversation, everything we're building in this community and we're talking about is for what we're all striving for. I'm myself still on that journey of financial security, financial freedom, is where we don't have to think about money. We don't have to think about our expenses. We're generating so much income that our DTI, you know, God willingly, is like 10% or even less, right? You're making so much income that our debt is very minuscule, right? So that's what financial freedom, in my opinion, is having the time freedom, having the capital to exceed your expenses, and having that financial security, right? So there's a lot of takeaways for today's call. And again, follow BBPA on all their social media platforms, Facebook, Instagram, and all their social media platforms. The key takeaways are usually sent out during the week. You'll get these key takeaways, but I certainly want to go over some of them just to summarize today's conversation. Is the five key takeaways is understanding the different types of debt that we talked about in the beginning, and how it impacts your credit, whether it be the credit cards, whether it be the student loans, whether it be the mortgages, and how it has distinctive effects on your credit report, and ultimately learning about that enables you to make informed financial decision. Number two is debt to income ratio. We talked about that ratio. And, I have a quick question. This is the last, I guess, question I have for you guys. And whoever can answer it, effectively unmute your mic or type in the chat box. But who can tell me what DTI is? What is that ratio? And what was a number that I mentioned is a good benchmark to have your DTI? Anybody want to?
Is this for our last pair of tickets?
Possibly. Let's see who can answer the question, and was paying attention, because I know it's Saturday morning, and sometimes it's tough to stay awake. But who was paying attention? What is the DTI formula, and what was that ratio I mentioned is a good benchmark to have your DTI?
So we've got answers already. Modest said 10% or less. Alicia said 25 to 30%, and Lucy said 30%. If I remember correctly, I think Alicia would be first there with that 25 to 30%.
There you go. Congratulations, Alicia. You are the winner of our last pair of giveaways. Congratulations. Make sure you message before this call is done directly to BBPA's host. Your email, your first name, last name, and email address of yourself and your guest who you want to accompany to next week's major event, M2M Con. And I can't wait to see you there. So great. That's exactly what it is. The ratio is you want to keep it between 25 to 30%. You did forget the formula, but it's okay. We'll let it slide. The formula is actually your debt, whether it be monthly, annual, divided by your income, and that gives you the ratio. Thank you guys so much for participating when it comes to that. I'm very grateful. Me and Chanelle are happy. It makes the call a lot more fun when we get more interaction. So, great job. So the other three components of the takeaways, as I mentioned before, is effective debt management, implementing these strategies, creating a budget, prioritizing high debt, exploring debt consolidation options to help you regain control of your finances and to reduce debt ultimately. That's the bottom line, guys. You want to reduce debt. And then number four is improving your debt to income ratio by increasing your income and taking steps towards achieving better financial stability and securing favorable loans. By increasing your income, you're reducing your debt, and you're also increasing your income that you're going to get more favorable loans as well too. And number five is the long-term benefits of debt management, which is what we're talking about right now. And as I wrap up the call, is managing debt effectively not only reduces your interest costs, but it also leads to improving your credit, your financial security, and the ability to work towards your long-term financial goals, whatever that may be, all right? And your retirement goals. So thank you guys so much. Another impactful, another valuable call.